Assalamu alaikum and hello everyone, especially the students. Today's presentation is on MFRS 116 property, plant and equipment. And in today's presentation, we are going to focus on derecognition of property, plant and equipment. And for your information, this is a presentation for part E of the learning of FAR210 for topic 3 that is also on property, plant and equipment. So let's look at the lesson outcome. This is our lesson outcome today, which is to be able to explain the accounting treatment together with the adjusting journal entries for the recognition of property, plant and equipment. We'll be looking into that very short while. Then state the disclosure requirements of MFRS 116 on property, plant and equipment. The recognition of property, plant and equipment. The term derecognition, it means that to remove or to exclude the item of property, plant and equipment from the entity's accounting records. So entity's accounting records here refers, for example, to the PPE account, where PPE account will have to be credited. And with that, the item will be removed, because when you recognize the item, earlier you have already debited. So when you remove or exclude, or the term is derecognize, the PPE or the entity's accounting record must be removed and the PPE must be credited. So from the books of the company, the reporting entity. So under MFRS 116, there are derecognition criteria, and that requires the carrying amount of an entity's item of PPE shall be derecognized on two situations. The first one is on disposal. So here could happen where you sell the asset, or perhaps when you donate the asset to another entity, that can be disposal. Or maybe when there is no more future economic benefits that the company expect from the use or from the disposal. So if you use it, also it will not generate any more future economic benefits. If you dispose, it also won't be generating future economic benefits. So that shall be derecognized. So let's look at the accounting entries that will be involved in accounting for derecognition. Derecognition normally will involve disposal or sale of some of the items of the PPE. And during this disposal, it will involve also any loss on the disposal, or loss on derecognition, or any gain on the derecognition. So let us look at the accounting entries that will involve derecognition at a loss. The first one is to remove the PPE account that is being derecognized. So if you remove the motor vehicle will be credited. And that is to remove the cost of an item that were being disposed only from the entity's books of account. Secondly is for us to remove the accumulated depreciation. Remember, for items which are depreciable, there are depreciation charged to the item. So therefore, the accumulated depreciation that has been accumulated previously must be removed or being written off prior to the derecognition date. Next one is to record the proceeds. So whenever you sell the assets to the other entity, the payment will be received. So the bank account will need to be debited to record the amount received from the derecognition or the sale of the PPE. So if there is any loss, because our focus is if there is any loss, that will be debited to the statement of profit or loss. And the loss is being recorded, and the loss is actually an expense that would happen if the carrying amount of the item disposed exceed the disposal proceed. Let us look at the accounting entries for derecognition when there is a gain. Let's say you have a profit on the disposal or profit on the derecognition. The similar process where first you need to go and remove the cost of an item that were being disposed, let's say a motor vehicle, so you will go and credit them. And then the accumulated depreciation relating to the motor vehicle or or perhaps lorry that were being disposed will also be removed, because when you provide depreciation, accumulated depreciation are being credited. So whatever accumulated depreciation that were earlier credited now will have to be debited, because you need to remove that accumulated depreciation prior to the derecognition of that particular let's say PPE, motor vehicle, for example. Next is to record the payment as usual. Record the amount received from the entities or the other parties, or that is going to be your customer perhaps, and that would be from the derecognition, the reporting entities. Next would be to record the gain. So for gain, it will be credited to the statement of profit or loss. So before this, loss was being debited. So the gain on recognition or gain on disposal is to record that in the statement of profit or loss, and that should be under other income. And that would happen if the net carrying amount is less than the disposal proceed, meaning that you receive more from your payment that you receive from the other parties that bought your PPE as compared to the carrying amount of the asset itself. So the accounting treatment, as I said, derecognition requires removal of both gross carrying amount, and that is as per MFRS 116. And the gross carrying amount is actually the cost minus the accumulated depreciation. So you need to remove both the carrying amount, which is the cost of the disposed PPE, together with the accumulated depreciation of that PPE being disposed. From where? From the entity's accounting record, from the financial statement, from the list of accounts. So to remove the cost, where you are going to go and credit the asset account, these are the costs that are being derecognized or being disposed only. So let's say a building is being derecognized. Out of the 10 building, only 1 building is being derecognized. Only that building that is being derecognized is being removed. The remaining 9 building, for example, will still be retained in the account. Example 1. So example 1 is on this motor vehicle that has a cost of 200,000 on the date of purchase and an accumulated depreciation of 120,000. So this is the accumulated depreciation prior to the derecognition, and this is the cost on the date of acquisition, DOA. And it was being sold off for 90,000. Just watch carefully on the colors that I was using. So you could see that I used a green and then blue and also some pink here, right? So that is just to classify things easier. Okay, so the first one, as usual, is to remove the cost. So you will remove it. So later, individually, you are going to credit the motor vehicle account. Of course, there will be account that will be debited, but this is doing it step by step. What are the account that you need to credit the motor vehicle? 200,000 with the cost being disposed. That is the gross carrying amount that is going to be credited. So we will later combine that in one journal entry, but we'll do it one by one first. So the second one is to remove the accumulated depreciation. So the first is to remove the cost, now is to remove the accumulated depreciation of the asset being disposed. So when you remove, you are going to it means that the accumulated depreciation account will be debited. With how much? With the 120,000 of accumulated depreciation prior to the disposal. The next one is because the disposal will bring some cash inflow to the company, you will have to record the proceed on the disposal. So the proceed on the disposal is this 90,000 here, which is the amount that you sold for. And that is what you call the proceed. It is sold for. So the motor vehicle that is sold for 90,000, that 90,000 is the money that you receive when the entity disposed or sold the asset. So bank will have to be increased by debiting it by 90,000. The next one is to look at whether there is a gain or loss. In this case, if you look, there is a proceed of 90,000, sorry. So that 90,000, first you need to go and check the gain on disposal, whether the gain or a loss. In this question, I'm trying to illustrate a gain. So a gain would happen if the carrying amount is less than the disposal proceed. So carrying amount is less than disposal proceed. So disposal proceed is greater than the carrying amount, you will get a gain. So therefore, the gain that you will calculate in a short while will be recognized as other income in the statement of profit or loss. And gain shall not be classified as revenue. So it is not a revenue, it is part of other income. So let us calculate the gain for our example 1. So if you can see, I have mentioned that you need to compare the carrying amount with the disposal proceeds. So that is the comparison that need to be made. So if you compare, the cost is 200,000 and that cost has accumulated depreciation for that asset was 120,000. So now we can calculate the carrying amount, which is the cost that you acquired minus the accumulated depreciation up until the date of disposal, which is 120,000. So the carrying amount is 80,000. And you will compare that with the disposal proceed, which is 90, and therefore there is a gain on disposal because the disposal proceed exceed the carrying amount by 10,000, and that is to be credited to the statement of profit or loss as other income. So that will have to be recorded as gain or profit on disposal, where you will credit in the statement of profit or loss. To combine all 4 entries that I earlier have already mentioned, let us now look at the combination of it. So to record the derecognition of motor vehicle, we are now combining all 4 entries. So the first one, of course, to remove the motor vehicle, the costs that are being disposed. Second one is to debit the accumulated depreciation, which means that is removing the accumulated depreciation. Third one is to debit the bank that is showing the increase in the cash inflow bank because of the disposal. And the last one is to credit the statement of profit or loss, which is the gain on disposal for the profit that was earned. So altogether there are 4 entries, and you can do this combination, which is simpler. Next, you are to advise the company on the accounting treatment for disposal or for derecognition. What are the accounting treatment? So that accounting treatment should be based on the journal entry that you have just done earlier. So the first thing is for you to go and mention about what you have done to the costs. So this is the one that you have mentioned. Number 1, that is the cost being disposed, and sorry, this is carrying amount actually. This is carrying amount. So this is the carrying amount. You are going to remove the carrying amount. That is the cost, 200,000, deducted with the 120,000. That must be excluded. The cost must be removed, and the accumulated depreciation also must be excluded from the total asset or from the PPE, which is in the financial statement of financial position. That was the first advice, to remove. Second one is to the advice to recognize the proceed of the disposal of 90,000. So the company should have increased the bank account because we earlier debited the bank account. Next is the gain on loss. Gain or loss. Here is the case of a gain because the disposal proceed exceed the carrying amount. Earlier we have already calculated that, and that 10,000 is recognized in the statement of profit or loss as other income. So that was the advice that need to be given. So when you are asked about advice, do not just simply give the figures, but you need to explain that in a more structured sentence like what I have provided here. And the next agenda is to look at if there is any loss on disposal for a situation of derecognition of property, plant, and equipment. This will normally happen when the disposal price or disposal proceed, it was being derecognized lower than the carrying amount. So you are selling cheaper than the book value or the net value of the asset, the net carrying amount. So loss on disposal will happen or will arise because disposal proceeds are less than the net carrying amount, and the loss, as usual, that is going to be treated as an expense in the statement of profit or loss. So let's look at example 2 where the information are all the same as per example 1, with exception that now the proceed is 50,000. In the example 1, the proceed was 90,000. Here it has been changed to become 50,000. So the same thing, determine the carrying amount. The carrying amount is still the same, no changes. So disposal proceed is the one that changed. So take extra careful here. And therefore, if you compare the carrying amount, which is the cost minus the accumulated depreciation, right? That was already given earlier. So you will get the loss, which is the 30,000 that you need to treat as an expense in the year it is incurred in the statement of profit or loss. So now let us look at the journal entries, which is the adjusting journal entry that combines all the process that I've earlier mentioned. The first one is to remove the cost being disposed, the 200,000 of the cost of the asset disposed. Second one is to remove the accumulated depreciation and also to record the bank, which is the third step, 50,000. And if you compare, as we have already done the workings earlier, there was a statement of profit or loss that need to be debited with the loss on disposal, that 30,000 that we have earlier calculated here. Okay, so that was the entry. If let's say you come across carrying amount is equal to the disposal proceed, let's say that happened, there is no profit or no loss on disposal. That can also happen where the carrying amount is equal to the proceed, disposal proceed. Let us advise or look at the advice if there is a case of loss. Remember, example 2 is about loss on disposal. So the first sentence is exactly the same as per example 1. Talk about the carrying amount to be de-recognized or to be excluded, which is the cost less the accumulated depreciation. The record here that makes a difference is this amount, where you will have to just replace the figures 90,000 with 50,000 as an increase in cash at bank, and now it is no longer a gain, so it is a loss. So loss on disposal of how much, 30,000, is recognized in the current year statement of profit or loss as an expense. So let's look at the one comprehensive question, which is from the common test November 2019, question 3, and this is just focusing on question 3 that relates to the recognition. So the part on the recognition only, right? So on 2nd of May is the date of acquisition of the item that were being concerned here. TB Berhad, the reporting entity, has decided to dispose. Sorry, this is the date of disposal. The 2nd of May. So be careful with the date. The 2nd of May is the date of disposal. Right, so that was being disposed. What was being disposed? One of its motor vehicle, and that was being disposed for 58,000. Remember, this is disposal proceed because I used green earlier, right? Disposal proceed, which you receive from Gray, and then Gray Limited paid for the motor vehicle by check, so it was received by check. So bank account must be debited. And it was informed here that TB, the reporting entity, bought the motor vehicle on 1st of July. So 1st of July, here is the date of acquisition for the motor vehicle. So it was bought on 1st of July 2017 and it was disposed on 2nd of May 2019. And depreciation is charged at 10% per annum on carrying amount. And on a monthly basis, which is month-to-month depreciation. The company financial year ends on 30th June. So this is not a calendar year, but this is the middle, which is 30th of June, in the middle of the year. So the what you have here is that reducing balance method actually for the depreciation, because the question clearly mentioned 10% on carrying amount, which also implies reducing balance method will be adopted, or on carrying value. Sometimes you may come across net book value. It means the same, which is reducing balance method will be applied, right? Since there are no other information stating that it use straight line method. So you are going to discuss whether the motor vehicle can be derecognized in accordance with the guideline under MFRS 116, and also going to discuss the journal entries. Prepare the journal entries. You need to show all workings. So let's go with the first one, which is to discuss whether the motor vehicle that will be the one motor vehicle can be derecognized, out of all the motor vehicle that were owned by TB. So the first one is to state the derecognition criteria as per MFRS 116, where this is the recognition criteria that we earlier learned, where it should be derecognized on disposal or when there is no more future economic benefits expected from its use or disposal. Then state your conclusion or whether or not the company can or cannot derecognize, and then give the reason. So you need to give the reason and also decide whether should the company derecognize or not with the guidance of MFRS 116. So in this case, the company sold the motor vehicle, which is one of the situation that you can derecognize, sold the motor vehicle. Therefore, that is the case that allows the entity to derecognize, so the company can derecognize the motor vehicle from its account. The reason is the word sold or dispose here, but the conclusion is that you say you can derecognize, so that is the conclusion that you made, and the reason is due to the disposal or due to the sale of the motor vehicle. Right, that sentence must be written to decide whether or not it has to be derecognized. Let's look at the answer for the journal entries. Before that, let us work out things for depreciation. You need to plan and show all workings for depreciation and accumulated depreciation. Here, I've already drawn a timeline for the date of acquisition of the motor vehicle that were being disposed. Remember, it was 1st of July 2017. And then it was being disposed here. That is 2nd of May 2019. That has been with the company for 22 months, and after 22 months, the motor vehicle were being disposed. So the first year is here. This is the first year. And in the second year, it is being disposed when? On 2nd of May 2019. And the year end for that year is 30th of June 2019, which is 2 months later. The company will have to close the accounts. So let us just extract some of the information to calculate depreciation. So I've already provided a table of checklist for you. So if you look, the depreciation rate as per the question was 10%, cost was 75%. If there is any residual value, this is not applicable for the reducing balance method because our method is reducing balance. Depreciable amount. Okay, for the first year, the depreciable amount will be on cost, which is the cost of 75,000 that you paid when you first purchased the asset. In the second and subsequent years, because this will involve 2 years of accumulated depreciation, the first year and the second year. So the second and subsequent year, it will be on carrying amount because we are adopting reducing balance method. So a carrying amount, please recall, carrying amount is cost minus accumulated depreciation. In this question, monthly basis is being also adopted. So depreciation will be provided from the date of acquisition up until the date of disposal. From the date of acquisition up until the date of disposal. Meaning that for the 22-month period, depreciation must be provided, and that will give you the accumulated depreciation. But the one that you calculate per year is the depreciation expense. So the date of acquisition is 1st of July. The date of disposal is 2nd of May, and the year end is 30th of June. And just recall this depreciation expense for reducing balance method and this is using monthly basis. Depreciable amount, for us, depreciable amount will be cost for the first year, will be the carrying amount for the second year, since this is reducing balance method, times with the depreciation rate, which is 10%, and times the monthly fraction. For the first year, there are no monthly fraction because 12 months is 1 year. But for the second year, it will be 10 months, which is 10 out of 12 months. So let's look at the workings I have already prepared here. This is 10% reducing balance method, month to month ownership. For 30th June 2018, 30th June 2018, that is the first year, you will provide depreciation based on cost, and that was for the full 12 months, and the cost was 75,000, and that is based on cost that you earlier purchased. 10% times 12 over 12, that will give you 7,500. So the accumulated depreciation is 7,500 for the first year. In the second year, so that is the first year. Now we go to the second year. For second year, depreciation will be provided only for 10 months, which is from 1st of July here up until 2nd of May 2019, and that was 10 months. And what you will provide is based on the carrying amount, and the carrying amount is because this is second and subsequent years, and this is reducing balance method, so it will be cost minus accumulated depreciation. The cost is this, the accumulated depreciation is 7,500. This is what you have here. So times 10% times 10 over 12. 10 over 12 is actually the monthly fraction, and that is the second year calculation. And you have the depreciation expense of 5,625, and if you add this with this, you will get 13,125, and 13,125 is the accumulated depreciation on the date of disposal. So that information will be used to calculate our gain or loss. So let's go to the next slide, and this is for us to do before we can do the journal entry. So to get the gain or loss, you just take the cost minus the accumulated depreciation that you earlier calculated from our previous slide, and that will give us the net carrying amount of 61,875 compared with the proceed of the disposal 58,000, and that will give you a loss on disposal of 3,875. From there, you can do the journal entries as usual. Go and remove the motor vehicle, right? And then go and remove the accumulated depreciation, record the proceed, and number 4 is to record the statement of profit or loss for the loss on disposal. So just make sure that you have all that properly worked out before you decide to do the journal entries. The most important thing is that you get the accumulated depreciation on the date of disposal correct, so that you will exclude or eliminate the correct accumulated depreciation amount, which is 13,125. Okay, that was the journal entries for the recognition of the vehicle disposed. So now let's move on to the last part, which is disclosure requirements. These are some of the disclosure requirements that are provided or prescribed under MFRS 116, the accounting policies for the property, plant, and equipment, either cost model or the revaluation model. You need to also show the movement of the property, plant, and equipment via notes to the account. Also, you need to show the voluntary disclosure. This is not mandatory, just a voluntary disclosure about the amount of the PPE that was temporarily idle, and the gross amount of the PPE that were fully depreciated but they are still in use. That has to be mentioned. Carrying amount of the PPE retired from the active use that are not classified as held for sale, and also the cost basis if the fair value is materially different from the carrying amount. So that's it. That's the end of the presentation for MFRS 116. Thank you for watching. I will see you in my other videos, which will be on the sample question and answer. Don't forget to take your break. These are the reference being used, right? Reference being used. And with that, yeah, we'll see if we can have this session. With that, I thank you for watching. I'll see you when I will see you. Till then, Assalamualaikum and bye bye.